Good morning, good evening, and good afternoon, folks. This is Naeem Aslam, Chief Market Analyst at AvaTrade, and welcome to our weekly session of masterclasses in which we discuss various different topics. As always, just a bit of a small question for you guys. If you guys can see my screen and if you guys can hear me perfectly, please do give me a sound and a screen check so that I can make sure that you guys can clearly hear me. Thank you, Amutha. You are perhaps always the first one to say yes. Greatly appreciate this. A lot of familiar names once again over here, as always. And it is great to see them because it shows that consistency and persistent behavior of these traders who want to become the finest traders in the industry. Because one thing I can assure you, there is no such thing which you can say that yes, I have learned everything in the market that I can, because this is a long learning curve. Two eyes are better than one eye. Same goes for in terms of minds as well, because in these sessions, not only we provide the basic fundamentals of trading and the strategies, but we also discuss advanced sort of strategies and sort of create that discussion among our community to really get the conversation going and then come up with some really great educational tools which can be implemented in your daily trading strategies. So a bit about myself. I come with a wealth of 15 years of trading experience. During this time period, I have worked as a hedge fund trader with Bank of New York Mellon, as an equity trader with Bank of America, and currently providing services to AvaTrade as a chief analyst. Maybe some of you guys have also seen me on television such as CNBC, Bloomberg, or read my article on Forbes, where I have worked in 5 years as a columnist writing about stock market and various different opportunities. Now, let's continue with any further ado. So someone is saying that not being able to see my screen. I'm not sure why can you not see my screen, because my screen should be visible. I can see that rest of the traders can see my screen. Can everyone see my screen? Or is it just one person having an issue with it? No? Okay, everyone can see it. That's great. A bit of a disclaimer, as always, that is right in front of you. If you guys wanted to know a bit more, always feel free to contact. And here is our contact details on a daily basis. Do suggest you to follow Twitter. And for YouTube, we put 2 different videos out on a daily basis, your daily fundamental video, and of course, your technical analysis as well. Now, something bit of a good suggestion for you guys, AvaTrade's unique technology that I kind of wanted to bring it over here. AvaProtect is a revolutionary one-click risk management tool. Of course, risk management is a very important part. Available on AvaTrade's web platform and AvaTrade Go app. With AvaTrade Protect, you can purchase protection against loss for a defined period after opening a trade. If a protection ends and you have an open position that is losing, AvaTrade will reimburse that loss directly into your trading account. The only cost is the trading, the option cost itself. Now, what is the agenda for today? What we'll be discussing is why to trade indices, the inverse of indices. We'll be also talking about some of the fund flow, defining levels, and defining strategies. So now, without any further delay, let me bring out the MT4 platform so that we can have a bit more discussion on that. So once again, allow me to share my screen. Okay, why is it not? There we go. Perhaps AvaTrader. No. Okay, just trying to share the screen. Sees that there seems to be some sort of an issue. Why is it not sharing my screen again? There we go. It should be done now. You guys should be able to see my screen. Now, can you guys see my screen? Yes? So you can see the MT4 platform. Okay, great. So if you can see the no, people saying that they can't see that. This is why it is what it is, technology. What can you do? All right, okay, so there we go. So you should be able to do that now. So there you go. So, okay, so can study question number one, for those of you who have actually attended my previous webinars, why do we trade indices? Can you please tell me the benefits of trading indices? This should be fairly easy question for all of those guys who have previously attended our webinar, because I do always kind of go through the benefits of, you know, trading indices. Yeah, excellent. Amutha is saying that because these are group of stocks, and because these are group of stocks, so that gives you a major diversification across a number of other stocks. Let's say that you have $1,000 in your account. You know, if you wanted to go and buy Google, Facebook, you know, you won't go too far in buying too many shares or too many companies. But if you buy S&P 500 index, you own all the 500 stocks in the S&P 500 index, which is quite intriguing, given that you'll only have a $1,000 in your account, but you own all the top 500 companies. Or in case of NASDAQ or the US Tech 100, if you buy the index, you are owning all the 100, you know, sort of a stock exposure with respect to that, which is quite cool and gives you a lot of diversification in a way that, you know, one particular stock may drop, but the index overall may not drop that much, because, you know, some other stocks within that index would be kind of moving to the upside. So it sort of counterbalances that. And in addition to that, indices usually will have a much bigger moves on the daily basis, as opposed to some of the stocks. So, you know, that again, that volatility kind of gives you a much better opportunity in terms of a daily basis, like how you can take the advantage of higher volatility. So that is quite again, you know, that's quite an intriguing one, because I love to trade volatility, and we all know that for the last few months, we have seen excessive volatility, you know, for this particular year. Now, speaking of volatility, guys, you know that today is the 30th of June, and that means that this particular first half of the year is coming to an end. And if you're looking at the performance of the S&P 500 index, remember, we started the year at the beginning of this year, you know, in January, we were trading in around this particular area, and then look where the market is trading now, and then see how far the market has gone. So, you know, that's a decent double-digit gain for the market, still sitting over here. And statistically speaking, when you do have double-digit gain in terms of stock market, really in the first half of the year, you know, the chances are that we will still be closing above this particular point at the end of this year in December. So we'll be still looking for gains in terms of this particular stock market. So that's quite an intriguing one. So and of course, we will discuss everything in relation to that for other indices as well. So just to give you a little bit more background of what is going on the chart, as always, we have three different indices. This over here is your 50-day simple moving average. This over here is your 100-day simple moving average, and followed by that you have your 200-day simple moving average. Now, if you are wondering how to put these moving averages, you go over here to insert, and then you go to indicators. From here you go to trends and moving averages from here. Now, once you are into moving averages from here, the period, you change that to 50. And if you wanted to follow my footsteps, then I like to keep 50-day simple moving average in pink. And if it is a 100, then I like it, keep it in orange. And then for 200, I like it in green. Now, of course, the question over here could be that, okay, why are we using these moving averages? The reason for that purely is because during my days as a hedge fund trader for working for bigger institutions and looking at the industry statistics, most of the institutions would use these moving averages to determine if the price is overbought and oversold. Paul, I will answer your question just in a bit. Stay with me for 1 second. And guys, I do appreciate your questions, so keep sending me your questions. I will answer them as we go along. Now, again, going back to our topic of if the price is near 200-day simple moving average, like it was over here, it shows that the price was way too cheap at the time. So of course, afterwards, we saw this massive rally in this particular stock market. And secondly, what we really see is how far the price is trading with respect to 50-day simple moving average. So for example, from here, the price was over here, the moving average was over here, and then over here, the price was here, and the moving average afterwards, what happened, the price reverted back towards its moving average, kind of brought it back to the things, to the reality. So if the price is trading very far, like it was trading over here, and the moving average was trading over here, it tells us the prices are too rich, they're too expensive. Wait for a pullback, and that pullback happened afterwards when the price kind of dropped from to close to its 50-day simple moving average. Again, that 50-day simple moving average, every time the price kind of touches, it bounces back up quite sharply. Like you can see over here, it came to its 200-day simple moving average. We saw a big bounce and a big bounce and a massive bounce from its 200-day simple moving average. And fairly recently, we have also seen that as well. So that is the concept of 50-day simple moving average. As long as the price continues to trade above the 50-day simple moving average, we know that the bulls are in control. And if the price begins to fall below this moving average, we will have a clear indication that the prices are moving to the downside. Now, Paul has asked me a question that, of course, indices have overnight charges, and overnight charges are also there for your stocks as well, because you are buying them on leverage. Anything that you buy on leverage is going to have an overnight charges for that for sure, unless you buy a physical stock, which at AvaTrade we don't. We provide the derivative, which are the CFDs, meaning the actual, your right to buy the price of the stock rather than owning the actual fundamental, the stock. Not much difference between them. But I mean, but from that perspective, if you are trading from the price perspective, but if you are looking at the actual, then there are differences for sure. So overnight charges are there for Paul, and but for indices, you will trade them on the daily basis. So you will open up a trade when the market will begin trading. Of course, you will only start trading when the price will come into your defined area of support, and then you will close your trade at the end of the trading. Now, let's go back into further detail and spot our opportunities with respect to this particular US 500 index. Now, we know that the price, first of all, if this is our support zone number 1, and we are looking at this area of support right over here, where we believe that the market, if it comes over here, could be a great opportunity to buy. But at the same time, the price could be even smaller opportunity to buy where that 100-day simple moving average is trading as well. So if the price returns towards its 100-day simple moving average and stays above that, this could be a good area of buying as well. But of course, a better area to buy is going to be where these green lines are on this chart. Now, in terms of a short-term time frame, what we kind of really wanted to see is we want the price to stay above the 50-day simple moving average. But if the price doesn't stay above the 50-day simple moving average, if we see the price breaking below the 50-day simple moving average on the 4-hour time frame, that would be a confirmation for us that the price is really going to visit this area. So you could potentially put your short trade right over here with your stop loss above that 100-day simple moving average on the 4-hour time frame, because if the price breaks above this one, then you should be flipping this trade. You could be flipping this trade and really looking to with the target of this resistance area over here in terms of that price. So once again, to summarize with respect to the opportunity, the first opportunity is going to be right over here. If the price breaks the 50-day simple moving average, you could possibly go short and look for a target for the price to revisit this area of support, with a stop loss over here. But if that doesn't really happen and the price begins to break above the 200-day simple moving average, you could potentially go long, put your stop losses below that 50-day simple moving average over here with the target of the price moving into this area of resistance. Overall, if you look at the price does look a bit more bullish because we have a head and shoulder pattern sort of formed over here. There's a shoulder over here. So the chances are that the price is more likely to break to the upside in terms of that short-term trade. So does that make sense to you guys? Any questions on this particular trade? Because now is your chance to ask me if you are not sure what we have just discussed over here. So once again, this is our, resistance area over here, our profit area, profit taking area. This over here is our support area, that 32,943. Let me just make that a little bit more clear. So what I'm going to do is I'm going to do that. So this is our support area. This is our resistance area. If we are going to take the long trade for the timing, well, obviously we'll have to wait, but the long trade is going to be coming on the breakout of the 200-day simple moving average, with our stop losses over here sort of would make sense over here, and the target could be over here. But on the flip side, if the price is going to reverse its direction, then you will be looking at stop loss over here, and then with the prices sort of moving to the downside to this particular area of target is going to be, and your stop loss is going to be just over here. Now, similarly, what we're going to do now is we're going to look at the next index, and that next index, when we're going to compare that, is going to be your S&P 500 index. One prominent thing which stands out from this particular price point is that the S&P 500 index is trading well above its 50-day simple moving average. So a retracement is due, and the good area of support under those circumstances for this particular one is very much going to be coming somewhere near its 50-day simple moving average. So what we're going to do is we're going to draw our support zone. So our support zone, the better support zone is just right over here, because this is our support zone. So we're going to change the color for this one to green right over here. So again, I'm changing that. And as for the resistance area, we're going to keep that at over here. So that will be sort of our resistance area, and we will get rid of these extra lines on the chart, which we don't really need them anymore. So, and this particular one, we're going to move it over here. Now, let me explain them in a little bit more granular detail. So this over here, we do have an area of support right over here. So, and then we have our resistance over here. This is our support area number 1, and then this over here is our support area number 2. We would like the price to come into sort of this particular area right sort of over here to in order for that long trade to work. Otherwise, this could be an area where we could be looking to short. Now, when we go into slightly smaller time frame, like your 4-hour time frame, what we kind of wanted to see from this one is that the price is trading above its moving averages. So if we are going to wait, we should be looking to go long. Let's say that even we could, if you wanted to be very, very aggressive, so you don't want it to wait for the 200-day simple moving average, you may want to wait for the price to come close enough to these particular ones, and wait for the price to come into this area, like over here, like that, and maybe place your stop losses below this particular area, and wait for the price to pop back to the upside with a target of this one. So that could be one strategy. Now, the other strategy at the same time could also be that you may want to wait for the price to come into our original area of support, and that is that over here. So what you want to do under those circumstances is you may want the price to come into this area of support, place your stop loss below this line, and then target this particular area. However, if the price breaks this area, you may want it to reverse your trade. Under those circumstances, what would make sense is placing a stop loss over here above that, and then targeting this area of support in terms of that price action. Now, a question is coming in. The price movement on the screen has already happened. How do we know where to enter as a price action is yet to happen? I'm not sure what you're talking about over there. I mean, the price action hasn't happened. We are talking about the future price action, not the previous price action. I don't trade on the previous price action. I mean, I'm talking about future. So I'm not sure what the question really is over there. Perhaps you may want to explain that in a little bit more detail, so for us to have a better understanding of what you're trying to say. But I'll continue in the meantime. So again, for the S&P 500 index, what we sort of kind of anticipating is on the bigger term time frame, on the daily time frame, is this is our support area number 1, this is our support area number 2. We are waiting for the price to come into this area. When it will, then we could place our buy order and wait for the price with the target of this one to take our profit off and put your stop losses below that, or we can wait for the price to come into this area of support and then buy it at that time. Now, similarly, we're going to talk about the NASDAQ 100 index. Obviously, you know, NASDAQ, we talked about, if you have attended our previous webinars, we talked about the NASDAQ is becoming, you know, the possibility of becoming the leading index, which it did, and it kind of became that very nicely. Now we have seen some really serious strength in the NASDAQ index more recently, and the price has moved very, very aggressively to the upside. Now, in terms of a NASDAQ now, if we are going to enter, our first immediate area of support is going to be right over here, because now the price has gone too far, too fast. So we don't want it to enter the buy trade right now. We want the price, we want it to wait. We want to wait for the price to come and fall into this area of support where the 50-day simple moving average is trading. So, Kingsley, if you are looking to place your trades, I mean, you can't, I mean, that's just an easy way, you know. So let's say for this one, you just over here, you know, whatever you wanted to do, you could just buy and sell them from that particular perspective. So you know, for example, new order over here. So let's say that this is the US tech, this is that particular index, what sort of a volume you wanted to trade, whether you wanted to trade 0.01. Now, for example, if we wanted to place an order, you know, we wanted to place a pending order now. So we wanted to say, we wanted to place a buy limit order. At what price? We wanted to place a price at 13816. So we will add that. And so that is the how sort of, you know, you wanted to place that order. So I'm not sure if I understood if I understood your question correctly, but this is where you will place your order. And once the order is placed, then you will go and put a stop loss on that particular trade, if that kind of answers your question. But you, in order to place an order, I mean, all what you got to do is just go over here and then say new order, and then that's where you can place an order, market execution, then pending orders. I mean, I don't cover such basic things in my webinars, but at AvaTrade we do have other webinars which cover very, very basic sort of different order types and how to place an order and stuff like that. I hope that kind of helps. So again, with respect to NASDAQ, you know, prices are way too rich right now. We may want to wait for the price to come into this area of support and possibly look at an opportunity to buy at that stage, because right now, to go long at the current prices, it doesn't really make too much of sense because price is just too expensive. But if we compare the opportunity with the Dow Jones Industrial Average, then things do make the most sense, because the Dow Jones Industrial Average clearly on the daily time frame is trading below its 50-day simple moving average. So it is the cheapest, because if you look at the S&P 500 index, it is trading well above the 50-day simple moving average. The NASDAQ is trading very far from its 50-day simple moving average. So it shows that sort of, you know, sector rotation, an idea kind of taking place. Any more questions? I mean, remember, never ever be shy of asking any questions, because, you know, I remember 15 years ago or 16 years ago when I was at college and I was starting into this one, you know, I used to be afraid that, oh, whether I should ask this question. This could be very basic question. I don't want it to be, you know, get pinpointed or anything like that. There's no such thing called as, you know, wrong question or a right question. Every question is a right question, you know. So if you have, if you are unsure about anything, so feel free to put, you know, ask me all those questions over here, or you can always interact with me on my Twitter account as well afterwards, where I am very happy to answer all your questions. And my Twitter account, let me just give you guys over here. So that be my Twitter account handle. So you can kind of, you know, wanted to follow that, that'd be great, and interact. If you have any further questions, I'd be more than happy to answer those questions. Now, we have pretty much have come to an end of this particular webinar. Just to let you know, the recording of this one will be available on our YouTube channel. So if you wanted to you know, if you wanted to go through this particular webinar again to understand that a bit more, you could certainly do that by going to our YouTube channel, where this would be downloaded, sorry, where it would be uploaded. Otherwise, stay safe, and thank you so much for taking the time out to come over here to attend our seminar. And next week we'll be back with more interesting topics and then really discussing that. And remember to, you know, keep up to date with our YouTube channel, and also where we produce the most up-to-date analysis on a daily basis. Thank you.